This is Teddy Keckstead from Forex Trading Unlocked, and we are here today on June 20th with a Forex and cryptocurrency market analysis for you for the week ahead. And before we get into it, we just want to remind you with our disclaimer that this webinar is for illustrative and educational purposes only. Also, if you haven't done so already, please subscribe to our YouTube and Twitch channels, and that way we know you're notified when we go live with our videos, and reminds you when to come and look at ones if you miss them. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com, written by yours truly. It's you can, if you're an Amazon Prime member, you can actually read it for free in the Kindle version. So otherwise, it's available for everyone else in paperback and Kindle version. All right, so with that, let's get to our live screen here. We have the forex-trading-unlocked.com website pulled up already for you. Let's see what we have going on here. Okay, so we're going to go down, and we have the dollar index chart already pulled up for you. As you can see, the dollar index chart has definitely had quite the explosive rally that occurred from Wednesday in through Friday afternoon's trading. Now, one thing is for sure, this thing has covered a lot of ground very quickly. So we had rounded off this base here. We were making progressively higher move highs and higher move lows, just grinding through. Had this kind of pennant formation happening here, and boom, we just went through the 50% and 0.618 retracements on the Fibonacci level. This is a huge deal as far as we covered a lot of ground explosively. Now, there's a lot of factors involved as to why we did this. There's a lot of markets moving. The one thing that's interesting is we are now really coming out of this whole pandemic haze. We are no longer looking at coronavirus totals every day. What we are getting back to is the real economic numbers. And what's interesting is that whereas the dollar was gaining some strength here and there because of interest rate strength, now we have a bond rally and a dollar rally. What is going on? This is flight to quality like we haven't seen in a while. And why? It's kind of counteractive and counterintuitive to what everything has been at least forecasted by the pundits, if you will. We've been slightly bullish the dollar. However, the past 3 days really exploded. Now, when we look at the currencies, crosses the euro and the pound, it would be pretty relevant as to why the dollar index really exploded. But other markets too. So the dollar hasn't really confirmed that it's any long-term major bull. But I'll tell you what, if you look at this thing on a weekly basis as well, we are coming off of, no matter what, support, slowly upwards rising support that held us at the beginning of 2021, where we bounced. We came up, we made a lower move high. We've now made a higher move low a few months ago, and now we are trudging towards this key area, which would be the high from 2020 back here. So, excuse me, from the high back from 2021. So this would be March of 2021. So we're looking at this on a weekly basis. So if we can take out this 93.52 area, that would confirm a higher move high after a higher move low, meaning at least a neutral to higher trend for the dollar for the longer term. So very interesting stuff shaping up here. We have not ended the month, but on a weekly basis, boy, we are screaming higher. All right, now let's look at the Euro US dollar and see what's going on here. The Euro US dollar, which is one of the major components of the dollar index, as you can see, has been one of the reasons why the index is slumping. This as well fell through the 50% and 0.618 Fibonacci retracements. This is a big deal. Within 3 sessions, we plummeted through making this newer move low after a higher move high. And just really slamming support here. So the question is it overdone? I think possibly over the Sunday, Monday trade, you're going to have to deal with a lot of digestion. I'd use caution. If you're already short, ride the tide and keep your stops tight. I would definitely be careful trying to buy into this. Being a dollar bear right now is obviously on the wrong side. There's a lot of momentum. This is a big gap that we've came down through here. We were trading on Wednesday with a high of 121.34, and we got down all the way down to 118.47. So it's almost a full $3 move in the Euro US dollar over the course of 3 days after the Fed meeting on Wednesday, where Some of the Fed speak obviously didn't make the markets happy. There's other reasons as well. But now we definitely are showing that we have this disconnect from the pandemic and the COVID-19 issues. And I think now we are getting back to the economy and what really matters for markets. And with that being said, that's giving dollar strength right now in the short run. We could go but now into a sideways trade and digest this move. Once again, this is a big sell-off, but we have to see what kind of follow-through we get. Interestingly enough, oil being on its highs is going to start to slow down things in the economy, which is not good for the equity markets. This, I think, would also cause us to have a possible slowdown in the cross rates as well. One of the key things that you want to pay attention to is, do we get any real follow-through? If we really are having flight to quality going on right now, that would mean that the bonds will continue to rally, and also we will have, and just to show you what I mean by that, when you go to our navigation tab, go to the futures, and everything in futures is always in delay because that's a legal thing. You can't broadcast futures in real time. So, as you can see here, the futures ended the week higher, and boy, did they finish strong on Friday. So, interestingly enough, off of a Fed meeting where it had been chopping around in this upper part of its range that it's been in for months, we broke out to the upside on Friday. This is a big deal because as bond prices go higher, interest rates go down. So in the short run, longer-term interest rates are getting some relief right now. That would typically cause a sell-off in the dollar if it was just normal fundamentals. But once again, when we have dollars being bought and bonds being bought, that means it's flight to quality. That usually means longer-term that we're going to maintain a bearish outlook for some of the other major currencies. So definitely for the euro US dollar, I would say that we are now definitely confirming that besides having this downside correction that we began a little over a month ago, we definitely are trying to ride the lower end of support, and we've already taken out some key levels. This is probably going to be an area that we might start to settle into and chop around, and I would use caution here as we try and stay below this area. Now, sustained trading below this 119.21, that changes everything. Then we have the ability to get down to this 117.5 to 117 even area. So it'll be interesting to see how things pan out. We had a sell signal that was triggered back here on May 26th, this bearish engulfing line where we had touched in the short-term target here, and then boom, on Wednesday we flew through our extended downside target. So as far as our sell signal, that is already complete. So right now we don't have any reason to add to it, that's for sure. If anything, right now we're looking for a sell rally forecast, looking for us to get a little bit of a correction to get a lower move high to sell into. So that's what we'll be looking for, is a rally to sell for the euro US dollar right now. And as far as trying to buy it, don't try and catch a falling knife at all. Now let's look at the British pound US dollar. Here's another one. Fibonacci level, this one really slammed it. It settled right on the 0.786 level. That's kind of significant because it means now, no matter what, should we stay below here, well, we're definitely looking for new lows then in that situation. But that would confirm really, really strong weakness. I know it sounds like a kind of a ridiculous term, strong weakness, but it is a strong degree of weakness in the pound. It will be maybe aiding the dollar bulls in the longer run. So the one thing that's interesting is that the oil trade has been helping to pump up currencies such as the British pound and the Canadian dollar and the Australian dollar, as well as beat up currencies such as the Japanese yen. The oil trade most likely is off the table right now for the short run. It's something that we've ridden for the past 4 to 6 months, and it's helped out, really guiding us for really, really good portion of a lot of the swings that we've experienced, and especially the British pound. We've been able to buy dips in that versus by following just the wiggle and jiggles with oil. That is off the table right now. Something that we want to be mindful of also is that XAU USD, while we're talking about these key major currencies, look at how this is sold off. Looks a lot like the euro, just pounding, falling apart, just like the pound. This is a really, I mean, if you look at it, there was more action in 3 days than there was in the past 2 months, basically, as far as distance and range as far as from the highs to the lows of these 3 sessions. That is very significant. There was a big unwinding of funds. We're also pushing towards the end of the month. I think that if you have a lot of funds that have gotten their numbers up and they look really good as far as coming into the end of second quarter as well as the end of the month, they may start to really lay off. Remember, we have 4th of July holiday coming up in 2 weeks. With these things panning out and everyone really hanging on economic numbers, I would be very, very cautious as to how much volatility and follow through we're going to get. So this sell-off in gold also reaffirms that why we're having this big rally in the interest rates as well. So think about this. Flight to quality, usually the 3 markets you have are the bonds, for one, you have the gold market, and then you have the US dollar followed by the Swiss and the yen. So we'll take a look at how those are doing, and that also gives us more of an indication as to how much bullishness or bearishness we really have on the dollar, which is also interesting because when we get to the cryptocurrencies, this is going to be another reason why I think you're going to see a lot of very choppy trading over the next week and a half as we head into the end of the quarter, because cryptocurrencies are now a part of you have Coinbase, which is going to be ending on the second quarter. It's going to have financial results. There's other things that involve cryptocurrencies too, as far as the runoffs and the sell-offs. Maybe time for the next couple of weeks where we have a little sideways digestion. So kind of what we saw here at the top here, where we also had this was a sell signal right here. Speaking of another signal that panned out, we had this bearish engulfing line sell signal triggered here back on on June 1st to start the month off. We hit a minor target right off the bat, and then back on Wednesday we blew through our second extended target, and now we've completely come down, like you can see, just banging these new lower move lows. So what does this really mean for the pound US dollar? Well, let's take a look at the British pound versus, say, the Japanese yen. Look at this. The British pound has been railing super strong versus the Japanese yen. This is another one, too, that just a few days ago, it was wedging. This looked like it wanted to go higher. I mean, if you go back, here's Friday, here's Thursday, here's Wednesday. This market was ready to keep on going. I mean, look at this. Is a huge, huge, huge bull. Now, all of a sudden, I would be very cautious as far as to what's going on. This is no longer just a corrective wave. This may be the beginning of a topping area showing weakness for the British pound. So let's look at the British pound versus, say, versus the CHF now. This one here, very sideways, a little bit weaker. Can't get really much of a gauge on this one. This one plateaued a while ago. I would watch to see if this continues to sell off. Then that means that British pound strength overall is really the major factor here. So it's not just dollar strength that is driving this pound sell-off. It could be the fact that the pound is overdone versus many of these other currencies. Remember, the oil trade was a big portion of this, and especially with central bank actions becoming more and more of something that we're going to be looking out for, especially since we had the G7 meeting last weekend. We're trying to figure out what kind of reactions we're really going to get as far as the major 7 countries that were involved in this summit and where they're moving forward with the globe as far as geopolitics and geoeconomics as well. So definitely look out for this pound weakness. I would look to sell rallies right now. Be very cautious trying to buy in this. The pound, this is a radical move without having any major news that has come out with over the past few days. We're coming off of this Fed meeting that, yes, there was some interesting Fed speak, as always. If anything that I've gained from it is that we have a very wishy-washy Fed right now that had been very transparent for a long time, and now it is becoming very opaque. So that is going to be something that's worrisome as far as what's going on. I think that the bond rally you're seeing right now is a little bit of a fluff. It's a flight to quality going on. Once that flight to quality goes off, though, then I think you're going to see the bonds unwind. That's when you'll see a dollar sell-off. So until then, we'll watch out what's going on. If this is only a flight to quality rally, then we should see a sell-off in the bond market, which also would have, in the short run, a sell-off in the dollar market, in the U.S. dollar. If it is not flight to quality that's going on here and it's just been profit-taking, then we have another issue, because if we have a sell-off in the bonds, then that means this is just an upside correction for the bonds. They're pushing it. Once they start to fall on support again, rates are going a little bit higher. That helps to really strengthen the dollar. And if the oil trade is off the table, then that means inflation becomes a very big issue. Strengthen the dollar, probably weakness in many of the major other currencies such as the euro and the pound, which we just are talking about. Now let's look at the US dollar Swiss. Here's another European currency. Now this one Friday came right into our extended upside Fibonacci target zone. We have the 50% level and the 0.618 level, as you can see. This area now becomes our pretty much, I think, our area where we're going to have some digestion. Interestingly enough, we're coming off a lower move low, and boom, this is the one that really came out. Now remember, we're talking about flight to quality. If there really is flight to quality going on in the dollar and the 30-year note, then we will continue to see this rally get above pressure resistance above 92.65, and most likely see us get up above this 93 cents up to 93.5 area. That's probably, I think, the extent that you'll see for a dollar rally versus the Swiss before we start to see some digestion. That's, once again, if this is just a flight to quality thing. If it's something different where it really is a sign of dollar strength, and if we continue to get a dollar rally and a big sell-off in the 30-year bonds and gold remains lower, then that means we're probably seeing dollar bulls really set themselves up to pressure these currencies into the middle of the summer. Once again, be mindful of the fact that we're coming to quarter end. It's very likely as we come into these last 2 weeks, we get choppy here. Balancing is done. The banks are going to settle down, and unless there's any real reason for them to stake a position or unwind a position that they currently have, I'm pretty sure that they will leave things well enough alone, at least until after the July 4th holiday. So be mindful of the fact that we may have a little summer doldrum that's going to come into impact the markets. Now let's look at the U.S. dollar, Japanese yen. This is, interestingly enough, is coming off a higher move high from Thursday. Friday didn't have very much of a trade. This is another one where typically once we have the markets free flowing, when you have like the euro and the pound crashing versus the dollar and the Swiss, usually you'll see the Japanese yen actually go the other way, meaning that we'll have dollar weakness here and not dollar strength. Oddly enough, we keep on continuing to make higher move highs like we have here, coming off a higher move low. I would key off of this 110.99 area, this last previous high. Any rally above here was most likely going to spark fresh buying and drive the U.S. dollar yen up to around that 112.5 to 113 area. Oppositely here, we have this upward sloping support line. It's pretty even. It's almost a 45, so it's pretty nice sloped as far as maintaining a trend. If we take out this support line and then fail from 109.15, this would be what is necessary to really confirm any type of real pause for the cause and downside potential correction, and with trading below here. I would think that if you make a lower move low here after a higher move high, besides being neutral, you're probably going to have a lot of your weak longs scrambling for cover. This would be in the case of whether if the dollar really is just pushing a correction right now. There are some other factors that have been driving this trade, oil being one of them, and also the interest rate factor. Right now with that oil, like I said, being off the table, I think that is no longer an issue as far as dollar strength. So that could be another reason why we actually get a sell-off here. So I would be, right now at these levels, be cautious being a seller into new highs here. I would definitely not be. You don't want to be short above 110 or basically 111 even. If you are an aggressive buyer, make sure that you definitely use this 109.15 area as your base of support, and it's also risk. Anything below here will have you probably chopping in a bit of a world of hurt. Remember, overall, this market over the past few months has been trading basically in this range right here. So we're just pushing the upper end of this range. It's not unlikely that we fall back down and chop around in here. Anything like that is definitely within the realm of possibility. All right, we don't have no questions on the chat room, guys. All right, we'll just keep on going, but we're going to get to the cryptos soon. We're almost there. All right, Australian dollar, U.S. dollar. This is the one that aims to show us how it's falling apart. We really had a sell-off here. This market's been going sideways for months. I mean, we got to look at this on the weekly basis. It's so big here. Okay. So as you can see, we really fell out of bed here. Going back to the fall of last year, almost a year, we've been in this choppy range. Now, interestingly enough, what do we have here? We have a big sell-off signal coming here. We have a shoulder right here on a weekly basis, and then we have a head, whoops, not a GH, a H. We have a head right there, and then we have another shoulder right there. So very interesting, the fact that we took out this neckline here at 74.78, or excuse me, 75.31. That really sets us up for a bearish tone for this market. Now look at this. This market has been rallying basically since March of 2020. So the whole pandemic started. This bull run has just been going and going and going. Ended in February, has been topping around, but really it's the middle of May where it looks like it ran out of gas. So this is actually significant. If we maintain this posture, we may not be just setting ourselves up for a bearish correction. We may be setting us up for a monster correction here. Now this would mean that we really, really do have dollar strength in the market. And if that is the case, especially when it comes to the Australian dollar, this has been a big, big trend. And let's see, on a Fibonacci basis right here, we got you down towards this 67.74 to 64.65 area. This would be a really nice target zone to end up in. Now, this is something that's going to take, most likely, without a doubt, a few months to unwind or more. However, if this is a legitimate top up here, and this is a head and shoulders confirmed with this break, which it is, then that is a big deal. So as long as we stay below this downward sloping resistance line, that is a huge indication the Australian dollar, US dollar now for the next probably 3 to 6, 7 weeks will be in a sell rally forecast where right now if you're short, ride it, keep your stops tight. And definitely should we get any big bounces to the upside, look for selling opportunities. Right now it looks to be like a very clear long-term signal that we can take advantage of, and I would say that now is a good chance that all the Australian dollar bulls are going to start to have some issues. Now here's something you want to be mindful of. Why has Australian dollar been so strong through all the past month and a half or past year and a half? One of the reasons is they're a commodity producer. So there's been an inflation in commodity prices, everything from because of shortages to whatever demand. Now we have the issue with China. Remember that Australia provides most of their raw materials to whom? To China. In doing so, that means they are very susceptible to the demand of China. No brainer there, right? Well, for those of you that are unaware, China over the past week and a half has mandated that it starts to unwind its stockpiles, meaning that the government, remember that the government is 50-50 partners with every single business in the country. So they have that little factor involved. So now you have industries where they had been paying X price for materials. There were stockpiles that the government has been maintaining from everything from copper to iron, steel, what have you, and other raw materials for building and such, as well as even with oil. So by them releasing their government stockpiles, they're trying to stave off inflation because it's the only thing that they can do right now. As far as globally, we are facing super high inflation. This has everything to do with, between the global pandemic, that's one issue, and then with the United States, with the George Floyd riots from months on end that caused all kinds of other disruptions in commodities, with lumber and what have you, and businesses. So with these things trying to stabilize now, we're in a very shaky spot. So what is China doing? They're dumping their stockpiles. So they're using their reserves, just like you save for an emergency. Well, they consider it an emergency to keep their economy going because with the cost of supplies, it's going to be hard for China to compete on the open market. So remember, so when it comes to the yen, when it comes to the Australian dollar and the New Zealand dollar, this impacts a lot of when it comes to their economies, especially Australia, who delivers raw materials to China, and then Japan that produces goods as well, and what its costs are in competition costs. So here's the thing, is that if China can maintain a lower cost of production, obviously they can remain more profitable. Otherwise, they're running pretty much at a loss, I would say, throughout most of the globe with these higher inflated prices. So that could be something that will definitely impact this currency, because as the demand for these goods goes down, so does the strength in the Australian dollar. So I know it was a little bit winded there, but that I just want you to be clear as to why we have a fundamental outlook now that's most likely going to impact the Australian dollar, US dollar, for probably the next like I said, 3 to 6 weeks at least, potentially into the rest of the year. The only thing that would start to change that outlook would be if China starts to say we are now putting the lock back on the stockpiles, and the businesses in China have to rely on the open market for the cost of materials, which eventually will happen. But right now, like I said, this just started a week ago. It's going to take a while to really impact the market. But as far as the currency market, this would probably be one really good reason why you're seeing this sell-off. Not so much because of the Fed action. I think they just happen to be going hand in hand, which also lays support to the US dollar when it comes to the Australian dollar. So even versus your minor currencies, like let's say that this fundamental factor that we were just reviewing is a solid fundamental factor, that could really discount the Australian dollar, like I said, easily down into this area where we looked at technically from the Fibonacci level. And then even here, if that stance is maintained, I mean, think about this, like we're already right now, we're in June of 2021. If we go out 1, 2, 3, 4, 5, 6, that's right on the arrow right here. That puts us right into here, end of August. And then here, you're looking at November. So sometime in this timeline, I think it would at least be that amount of time before China says that we're going to start to put the lock and key on the materials for producing goods in the country. So we'll see how that goes. But right now we have a nice long-term target down to the downside here. Look to sell rallies on a daily basis. We've already blown through these things. We were looking for a signal because it's been trading sideways for so long. I mean, when you look at this trade for the Australian dollar, US dollar, it was a bear. I mean, range traders were doing well. Swing traders were getting killed, except for the guys who just happened to be short a week ago and held on. So we'll look for some patterns, and we'll look for something to do. Like I said, long-term, bear on this. Look for a reason to sell, or look for a rally to sell. Selling in the hole is something you want to be careful with, especially with this market, the way it's trading. All right, New Zealand dollar, US dollar. This is another one that did the same thing as the Australian dollar. Very similar in what it does, as far as like it just didn't have a head and shoulders. This also produces a lot of raw goods, not necessarily all for China. I think this once again is also showing that this rally that's been going on since the coronavirus started. And remember, let's just say that the coronavirus and the pandemic really is off the table. This should be the end now of that pandemic run. So the weakness the dollar has suffered because of coronavirus obviously is starting to show that it is no longer a factor. That doesn't mean that this is not just a correction in the dollar and that all of a sudden weakness is not going to come roaring back in the dollar. However, certain markets are probably overdone. This is another thing. New Zealand also, if China is lowering their demand and hitting their stockpiles, it means they're not buying materials from New Zealand as well. That's also going to impact them, and I think that could press this correction as well. How far? I don't know. This doesn't have quite the sell signal that the Australian dollar does, but we'll look at this here with the Fibonacci. So let's just say our Fib gives us a nice boundary here. We put this 50% and 0.618, and there we go. We have a nice little buying area here, down to 64.64 to 62.23. I could see this being a nice area of support, definitely somewhere around the 64, 64. Getting down to this area, that's going to probably be a little bit tougher. But if this really is a bear, remember we're coming off a higher move high. We made a higher move low, then we made a lower move high, and we confirmed a lower move low on Friday. That's at least neutral. Definitely have a nice slope for this bearish retracement. We'll see if it continues. I think that our fundamental rationale is enough to drive the technicals and continue to show them to have weakness develop as we have the next couple of weeks unfold. Remember, also, we're talking about the fund managers. Same case and story goes for this as well. All right, let's look at the U.S. dollar Canada before we get into the cryptos. But boom, like a balloon underwater. Look at this. This is amazing how this thing rounded out a bottom, and in the last 2 weeks, poof. I mean, the beginning of last week, it looked like it just wanted to continue going sideways and batter support. This thing has been breaking, and it's in this downtrend all since the pandemic. Boom, this one broke out. So this is something you need to think about. We have a lot of currencies that have, over the past week, taken out long-term trends on the weekly basis, meaning did they totally reverse? Absolutely not. But are they taking out the downward sloping resistance or support, depending on which currency and cross you're talking about? Yes, they are. So this definitely takes us off the long-term major bear scenario. Remember, this has been breaking, going down from basically here. We have March 16th of 2020 all the way to May 31st of 2021. So you're looking at 14 months of breaking, and then finally it stabilized a little bit, and this month, which is not over yet, could end negative on the month. Who knows? We'll see. But if we were to close right now at where we're at these levels, this would be a very positive indication as to where we are going. And higher in the short run is where we're going. Now, is it overdone? Are we going to go sideways first? Well, we are kind of coming into this consolidation area here. So I would use a lot of caution as we get into this smaller area right in here. So I think you're probably going to run into some pretty strong resistance, most likely see the market digest for a while before it really starts to say, hey, let's continue higher. But if the dollar is a true bull, then this is just the beginning stages of a monster rally that could go on for the next 3 to 6 months, for all we know. Remember, the dollar's been getting beaten up for 12 to 14 months versus most currencies, stabilized again some over the past couple months, but it's only been in the past month that it's really seen any type of real strength, showing that it really wants to maybe have, at least for the short term, a neutral environment for the U.S. dollar, maybe establish a range. All right, so U.S. dollar Canada, we're done with that one. Now let's go to the cryptocurrencies. Bitcoin US dollar, this thing is, now this one is live because the Forex markets have not opened yet. It's just a little after noon Chicago time, so we have another 6 hours before they start to rear their heads. The Bitcoin market here, right, is now in a holding pattern. We're looking at this 31,000 basically to 41,400 as our sideways range. What are we doing? Well, we're going nowhere. We're coming off of some support here just above 31,000. It seems to spike down there, consolidate mostly between 34,000 and 38,000. This is bobbling. Is it ready for a breakout to the upside or the downside? Well, go through, like if you look at, here's our top, here's our first wave down, second wave up, third wave down. This is our third wave up. We should still have a fourth wave, a fifth wave corrective move down. How far? That's a good question. Everybody has that one on their mind, especially for a lot of these people that own Bitcoin in the upper 50s and $60,000 area. So as far as the 50% level, we're pretty much treading on that from this last main low that was set back in March of, the 9th of March in 2020. All right, now let's get rid of this. Oops, that's not what we want. Okay, there we go. Sorry about that. All right, so we have this nice low range here. This is pretty much where we're settling down into. This is it. This is it for support. If this market is really going to have any long-term strength and especially Bitcoin is what? It's kind of like the dollar index. It sets the tone for the altcoin cryptocurrency market. Should this high of 41,471 get breached, that would confirm buying momentum and most likely spark another little move up into the $50,000 area. I would be very leery here, though, however, especially if we get below this 31,000. A failure from 31,000 confirms a lower move low after a lower move high. The trend is your friend. In this case, the trend is bearish. So for those of you that are looking to buy into Bitcoin at a lower price, odds of you getting that opportunity are pretty strong. If you bought it up at 58,000, 60,000, I think you're going to be waiting for a while before we're going to get back up to those levels. Definitely until we need a breach of 41,000 just before we can even get to that area. So, but right now I think you're going to have a lot of digestion as well. Remember, Coinbase is now a legitimate company. Numbers, they'll be watching those numbers and see how that ends the quarter, which will be very big for the crypto space and the crypto industry, since it is in its infant stages. How these things react, what are the numbers that show up, and how much they grow will be significant. Now, I would watch these numbers very closely. It's my prediction that you're going to have seen a big rise in revenue in Coinbase over the past quarter. Remember, it's a new stock. It's only been out for a little while as far as being publicly traded. However, especially with all the action in the crypto space, and I would think there has to be a lot of profit taking that occurred over the past month and a half from people that had been long from a long time ago and what have you. And should that really be the case, then yes, absolutely, I think you're going to see a lot of sideways action going on in the crypto space. So think of it as like this, until after we get to the July 4th holiday. Through that, we will be through the second quarter, starting the third quarter, and the holiday will be over. We'll be in the midway through the summer. We can focus on what's going to happen for the second half of the year. I think it's very important with the fund managers being as crazy as things are and the way everything is being watched now, that everyone right now is not trying to shake anything up by entering into any new positions that could possibly bring in any drawdowns. So watch Coinbase, see how that works out. I am going to make a bet, and I already have, that Coinbase is going to have some high profits for the quarter. Be very bullish for Coinbase, the company. Bullish Coinbase means bullish market volume, which means definitely continued interest in the cryptocurrency markets. Is it going away? Not anytime soon, that's for sure. The question is, how much demand in these different coins and different markets will we get? So this is our outlook for Bitcoin USD. Let's see how it's impacting. Remember, this is kind of like the dollar index. Let's look at XMR USD. So this is Monero. Monero is, interestingly enough, having come off of a lower move low. It's sold off really heavily on a weekly basis, just like Bitcoin did. On the daily basis, it's doing this wedging as well. Now, interestingly enough, this came off of a lower move high and a higher move low. Maybe this will be one of the indicators for Bitcoin as well. Now, remember, why do we looking at this currency? We look at the currencies, one, that we are long, but also the ones that have a viable technology. So as far as being used moving forward, Monero, as far as having stability implications, it has that, but it also has true technology implications where there is demand for Monero moving forward in the crypto space. Does that mean it doesn't have competition? Absolutely not. It does have longevity, it has a history, it has an interest, and right now it has more market, more eyes on it. So I would think that with this one, you have a lot of stability. We're not looking for any major sell-off. Even if Bitcoin goes lower, we are not really looking for this to fall too much further on support. If anything, we are looking for a challenge of 316. If we get a breakout to the upside in Bitcoin, I would bet dollars to donuts that XMR Monero is going to be back above this 316 level. If Bitcoin falls on support, unless it really has a monster sell-off, I think that this may continue sideways, maybe drift a little bit towards 219, but I don't see it getting underneath 219 unless you have a really strong sell-off in the Bitcoin market. All right, now let's look at ETH USD. All right. Now, Ethereum, here's another one where the technology seems to be very viable moving forward into the future. This one is following more of Bitcoin, probably because it's more closely related to it, not just in size and weight and length of history and market history, but for the fact that just maybe it's overdone. Um, Once again, for crypto investors, those that have any quarterly basis looking at stuff like that, I could see where a lot of people have traded on Coinbase and BitMax and whatever and are taking profits, especially for those that do have some sort of funds that are involved in it now for any family offices and what have you in the private sector. So this one does have a technology that we find will have a good chance of maintaining longevity and moving on into the future. Does it have competition? Once again, just like Monero, yes, it does. Probably not as strong, and definitely something that we really don't need to think about in the short run until it has really proven itself. But as far as right now, we're looking for this to continue to digest. Bitcoin going lower will most likely have this testing this $1,700 25 area. Do we see it really getting below that? Not really. Now, here's the thing to be mindful of. We have this downward sloping resistance line, keeping the trend intact. By attrition, we're going to go sideways through it. That doesn't mean that we're going to have a breakout to the upside. We could have a big choppy digestion area here going on for the next couple months. So be very mindful of this. Unless we see any real true headwinds of bullish action in the Bitcoin market, it's very unlikely that we're going to see Ethereum swell and get a bunch of new fresh buying that will drive it back up above the $3,000 level. I personally would like it if it does go above that level, but I don't think it's going to for a while. So for all of you long-term investors and bulls on this, I think you're okay. Hang on, and you should be all right. Short-term, though, if you're looking for any bullishness out of this one, you know what? The trend is your friend. Lower move lows and lower move highs are indicative of a bearish trend. So on the hourly and on the daily, this is a sell until it gives a reason to be a buyer. Right now, I would not try and catch a falling knife with this one at all. All right, now let's look at the Dogecoin. This was all the talk, all the talk, all the talk. And 30 cents seems to be the number. That's where everyone seems to come in buying. Now we're trading at 27 cents, and we're flirting with this 25-cent low. We're coming off of lower move highs after lower move lows. We're ready to make a lower move low again. The trend is your friend. By attrition, we've come through this downward sloping resistance. But even still, as long as Bitcoin is remaining kind of weak and bleak, this one as well, I think, is going to continue to erode. Does that mean that it's just an opportunity to buy? Well, this is the one where it gets a little sticky because Dogecoin is definitely popular with the kids and the meme area and what have you. The question is what future does it hold on a technology basis? Is the technology useful, and can it be used in the future, and does it have the potential for longevity? Yes. Does that mean it's going to happen? That's a really big question on that one. One of the main reasons being is that the viability of the technology just doesn't seem to be that catchy, meaning that it doesn't seem to be stuff that people are planning to use in the future. People are planning on the fact that people may use it in the future, but they're not really planning on actually using it in the future. So meaning that for instance, Monero can be used for transactions. Ethereum network can be used for transactions. It has growing interest and has a viability moving forward in the future. The question of whether or not Dogecoin really will be able to maintain that is very, very, very unlikely. So that's where we have a tough time. We own this at around 35 cents. We're down a little bit on it. We're going to probably maybe give it a little bit more if it dips back down to around this 15-cent area. Probably buy and try and average down a buy. We have a very small position in this one, so if it goes whatever and just turns out to be one of those things that doesn't pan out, it is what it is. Or we get a chance to buy a little bit more and average out our position. And then, without a doubt, if this thing goes back up to 80 cents, let alone $1, well, then I would say probably liquidate our whole position on this one. Once again, because I don't see the technology lasting. I don't even see it going above $1 anymore. Like right now, like if there is a change in that fundamental dynamic, where I think that the technology is going to become more utilized and people start to really embrace it, saying that, you know what, like it or not, Doge is not going anywhere. We're going to utilize this technology, and there's a big effort to promote that and make that happen. Then, wow, that plane's coming very close. I guess you guys can hear that plane from the airport. Anyways, that's where we're looking at it. So we don't have any questions about the cryptos or the Forex markets today. We've covered a lot of ground. We've looked at all the major currency crosses. We got some really interesting things happening with the way the dollar settled over the course of the Friday's trade and everything else. And now we're looking at these cryptocurrencies. Now remember, every time you come to the forex-trading-unlocked.com website, we obviously have our products, courses, and services. If you want to take a look at high probable Japanese candlestick patterns, that book that we were talking about, and we mentioned a couple of those signals, you can go to this page here and you can look at the cover of the book here, or you can just buy it, share it, or preview it. You can hit the preview, start reading it, see what it's all about. We have a video here also on it as well, and that's really interesting to take a look at that, see how past signals have worked. Also, remember, when you're on our website, you go to the Markets tab, Forex, you go to that, it'll give you an index of all different currency crosses. We have the futures, we have commodities, stocks, Bitcoin, different things to help you out. We have different tools. You can download the Ninja Trader platform or multi-charts platform for free. Then we have the Forex Trading Unlocked workstation page, just like we were working on there, that gives you the market numbers to start the day off, gives you a fresh Euro chart always. You just change the symbol whenever you want, and it also gives you all kinds of other information here as far as fundamentals on performance and what have you, and news and things that you can look at. So these are things to be mindful. I want to thank you for all your time here today and spending your time with us. Once again, if you haven't done so, please subscribe to our YouTube and Twitch channel, Forex Trading Unlocked. Check us out on LinkedIn also, and read the book, High Probable Japanese Candlestick Patterns. Integrate these signals into your trading systems and plans, and I bet you they will help you move forward into being a more successful trader in the future. Thank you very much for your time. I'm Teddy Keckstedt from Forex-Trading-Unlocked.com. We will